Hello, what is a realistic monthly return on swing trading, especially with swing trading strategy? We use long up trend line swing trading strategy. So what is the return we made in May and June of 2025? We are going to go through multiple reports, and for the month of May, excuse me, we made $747, and for the month of June we made $3,573. So let's take the month of May to see what we sold that month. And it is BKNG. We can go and see the detail on that. We can see when we purchased it and when we sold it. So BKNG, we purchased it on in March, and we sold it in June for 16% return, and that rate is just taking the profit divided by the cost. So that would be the only things we sold in May. So in June, there is CL that we sold, and we can go back and see. Okay, we have CL here. We purchased it in March, we sold it in May. For $77 profit or 1% return. So 3 months on it, and we have 1% return there. We'll go back to see what else we sold in June. Okay, so first let's do this. It's not where I want to put it. I think we should put it here, and we can freeze it so that the top can continue. No, it's not what we want either. Let's put it there and freeze it. Okay, it should work now. Okay, so we can continue down and see what else we sold in June. We sold fast, and when it's good, it's good when you are doing this, you track them, you record them alphabetical of the symbol. It makes it easy, in my opinion, to find your stocks faster. Whatever you use to track them, to do them alphabetical. So we bought it last year November, and then we sold it in June. So that's like 7 months or so, if not 7 or 8 months. and we have 1% return on it. So the next one on the list is going to be MRP. So MRP was a spin-off from L.L.C. I purchased L.L.C. last year, and at some point a company split from it, and they gave us some share of that stocks by decreasing L.L.C. stocks as well. So I put a note there, and I finally sold that MRP? Yeah. And I didn't really put the cost associated with it there. So it was in February and we sold it in June. So I don't really know the cost associated with it, because it was, I believe it, I think they finally associate a cost with it, but when I sold it and pulled the record, it didn't have the cost associated with it. So it's showing us that full amount as, the profits, whatever that is. So that we cannot really see the rates on that, since we didn't really actually purchase it. So the next one that we sold is PWR. So PWR will be in MRPs. So PWR, we purchased it twice, February and March, almost $50 or so difference in price, and we sold all of it in June for 40% return for one and 15% return for the other, for the total profit that we made. So those are the different stocks we sold in June and in May and June. Well, how many trades did we have did we make during those 2 months? So in May, we purchased a stock once on the 27th. We sold one on the 22nd. In June, we didn't buy any, and we sold 4. I think this one will be good to freeze it as well. If you are trying to freeze colon and rows, yeah, selecting the one cell from where you want to see, you don't want to lose, allow us to be able to keep those frozen and just move the rest. So those are the number of trades we made in May and June. So how many dividends did we make in May? $137, and in June $222. So you can see that I will say in average we are making around 150 or so, $179. I'm looking at the average here a month in dividend income, because those stocks that we are trading, some of them pay dividend. They are large cap stocks, growth stocks, uptrending stocks that we trade. and some of them pay dividend but small amount. And we have stocks from that we purchased previous year that we purchased for dividend income purposes, and we will sell them when they reach they become profitable, because for the time being they are negative, but we originally purchased them for dividend income purposes. So that it was another strategy, an investment strategy that we used in 2023, and we sold quite a bit of them to free funds to swing trade in 2024, and any one of those that became positive this year, we are selling them as well, because that strategy needs improvement, and those stocks are not stocks that I want to have in the portfolio anymore. I'm fine-tuning the strategy that I'm using is between investing and swing trading. So you can see that in May and June we didn't buy much stocks and we didn't sell much either. So it's not actively trading that we are doing. So, and again, it's good when you are doing that, you estimate your taxes and then you pay them as well on a quarterly basis or by the due date. So having a spreadsheet that you can track as you go every month how much your estimated taxes are, allow you when the time comes to pay, you can just total for that quarter or time frame and make your payments. And it is good, you track it and you take note of those payment and things like that, so that you can use it when you are doing your 1040. You can use that information when you pay it. Is the software will ask you that question, I would think mine ask, and you have your information and the amount that you pay as well. You'll be able to enter those in the tax software you are using to file your return. If you are filing it yourself, somebody is filing it for you, it'll be good to give that information to that person as well. So if you are tracking your profits by week, I don't really know what kind of week are May and June, but week 21 and week 24 are the 2 weeks in May and June that we made profit. And I don't count profit unless I sold things. So I don't take into consideration what is profitable that I didn't sell, unrealized profit or unrealized loss. I do not take those into consideration. I only take into consideration the realized profit. So, and it was June 11 that we made that sale. So you can track daily profits as well. And we have monthly profits that we went through. And daily purchases. So daily purchases, let's do this. We track the purchases by day, and then we track purchases by sales by days as well. And those are things that when you design your spreadsheet, you can we can pull those reports as well. And all of those are pulling from manual entry sheets that's where I'm showing you the rate of return. That's where the manual entries are made, and then you can just pull different report from there as well. So on the 27th of May, we purchased stocks, and we didn't buy any in June. So for daily sales, and those are tracking the sales and the purchases, that's every day. So we sold in May on the 22nd, and we sold in June, and I believe June 11. So the daily profits, let's see here, the daily profits, yeah, we have a bicolon here, I would think. We just come across it as well. Those are just different layouts, depending on which one works for you. And those, you can notice, you'll notice that for things we sold on the 11th of June, for that same day, we didn't buy anything. So therefore, our profit is not based on transactions of that day. It's based on what we purchased and when we sold it. The cost of purchasing it and the price of selling it, regardless of when we bought it and when we sold it. Does that make sense? So that's why I track when I purchase a stock, and then when I sold it, I go back on that same row, I'll put when I sold it. And by tracking them by row like that, I will be able to pull those reports more easily. Just having those month, week, dates, and you'll be able to pull those reports from there. But believe PWR is what we are looking at. Okay, so when we bought it, how much we pay for it is what we take, and when we sold it, we do the subtraction between how much we made selling it and how much we bought it for, to find the profits of it. So that's how we have been tracking those profits. And we have weekly trade here as well. For week 21, which is in May, we bought. So it's again based on the profit. So for the stocks that we sold to make this profit, that's how much we pay for it. And we have 16% return there. And for June, week 24, we have four stocks there. You remember some of them were like 1% return, and MPR was more. We have two different rates there, but here it will combine it for us. So now you'll ask yourself, well, we made 3,500 in June, but the real question is, how much do we spend to be able to make that money? And the answer is here. We spent $18,000 to make that 3,500. We sold those for 21,000. We paid 3 cents fee to make these profits. And for June, we have 19.67% return just by taking this and divided by that, and technically, let me see, it should be taking the fee into consideration though. I don't know if it's doing that. Let's try that again. I don't think he's doing it, but again the fee is very small. Like, do you see this one here divided by that? We can add the fee to it by making it as a sum of that and this. Okay. And we can just spread that one all the way. Why not? We can go to here as well. Okay. But yeah, so now we can go back. So that is the weekly trades and return. So we have commitment here, which is just tracking what we have not sold yet. But I think even things that we purchased in 2025 or 2024 that we have not sold is here as well. So if we go back, and one easy way to track that is when you bought something, until you sold it, you can just put that cost in a column for commitment, and after you sold it, you delete it out of there. That way your report for amount committed will be updated. And for purchases that cross years, if you have by year, you will be able to track them to know how much stocks you purchased in previous year that you have not sold yet. But I didn't do that, so it's just combine both, because what I have not sold yet, I put it back on the spreadsheet so that I have it there. And when I sold it, for that row, I'll put how much I sold those number of shares for. So for monthly trade, again for May and June, because we made those sales on one day in May and on one day in June, the weekly trade and the monthly trade report will be about the same for us. Therefore, we don't need to go through it, and the return will be the same as well. Although I could improve this one, to include the return, the cost in it as well. So you can design your own spreadsheet to track your own report, your own transactions. The brokerage firm should have PDA form for you. Will have a spreadsheet version as well, depending on what you are trying to download, and you can download those. But I think manually tracking your own transactions, you'll be able to pull certain report out of it as well. And when you download from the brokerage, from your brokerage account, and the spreadsheet, depending on how you design your spreadsheet, you can put in your spreadsheet and pull some report from it. I just found that my manual entry and the way I do it allow me to to be able to pull a certain report that I'm sharing with you. And I like that. And I found myself using this document more than the one that I will pull the monthly statements as a spreadsheet and drop on that document report that will generate. I found myself using this report more than the other. And for swing trading strategy that I'm trying, this allows me to actually analyze and see the improvement of the strategy and the stocks that are reacting well with that strategy. Does that make sense? So I have multiple rate of return calculated here, depending on your preferences. Excuse me. But there is one that I like over the other, again because of how I sell, how I track things. I like to compare what I sold to how much I pay for it. Does that make sense? Not just compare what I sold this month to how much I spent this month when it comes to trading. So for that reason, I have return based on how much I sold this month divided by how much I paid this month, and that will be the option 2 at the bottom. And you can see it can be very wild of rate of return, and I don't think it really reflects what I want. You see how huge this return is very huge. I just don't feel like I shouldn't have done that. But anyway, and then you see how the others are. So it does not reflect, does not have a good it does not reflect what I want for me. But the one that we saw on the monthly trade and the weekly trade, I like that better because it's taking what I sold and how much I pay for it to calculate the return, and I like that better. So alternatively, there is taking how much you have in the account, you invested in the account so far, your cash in the account, and divided how much you made that month by the amount in the account, or like if you are now updating how much you have in the account, or how much, pretty much when you track your deposit in your bank, in your brokerage account, you can use that as your capital invested. Excuse me. And how much you make during the month by that can give you a return as well. It does not mean all that money has been traded. You can have some cash in the account, but that is another way. So we have the monthly return as well, those two ways. And we have, but again, I like the one that is taking the cost by that is taking the amount sold by how much we pay for it. I like it better. I don't think I needed to go that far, but yeah, for those two, based on this type of return, that is what is showing. See, it's just too huge. Because I didn't sell anything that month. No, I didn't buy anything that month, and I sold that month. So that, therefore, you see how much is showing. Alternatively, and this one, because I bought things that month and I sold things that month, it's taking those two to work with as well. So I don't know what I bought for $29 though. I had to look into that. So the yearly rate of return, again, you can just pull those return and multiple options here, again using your capital or using how much you bought this year and how much you sold this year to do the calculation. Remember, the same money is being used multiple times, so but again, it's just not a good accurate return that I will work with. That's kind of small, but you have the choice to calculate your return the way you want to calculate it. Let's see how this is going. So this, we are trying to just track, the improvement over the years, 2023, 2024, year to date, 2025. But yeah, so, and you can see how we generate multiple reports from the documents to analyze our trade during the month. So thank you so much for your time. And this swing trading strategy is pretty much trying to buy at the valley and sell it at the peak of the mountain. So PWR, for instance, what else did we sell this year? It could be an example of that. So we bought it there, which is the mountain. When it start making a wall to support the mountain, we bought it there, but guess what? It continued to go down and went to the valley. So at the valley, we bought it again, and when it reached a new high, we sold it, and it continues to go up. But so this swing trading strategy is tracing your valleys and analyze the stock on a daily basis if you can, and when you reach the valley and start going up, start making higher lows, a sign that is down, going down, you buy. And when you reach a new high, you can compare it to the previous high to see if it's going to continue going up or if it's down. Or if you are comfortable with that profit, you sell it. And that is a strategy that works for us, and that is what we are trying to keep improving this year. That allows us to trade less. I think BKNG might be one that we sold this month in June as well. In 2024, we traded quite a bit, but then again, we bought it at that mountain peak, at the wall of that mountain, and we sold it when it reached a new high. But again, it may not be the valley. The valley could be this, or it might decide to just use this as a valley, but I think the valley could be this one. So we got out of it, but guess what? It pulled back a little bit and it started going up, because when it reaches a new peak, it tends to pull back a little bit before it will go back again. But we just like it that way, and we lock in that profit, and it continue to go up, because before we will buy it again, it needs to go down. So when you get out of it, it might be a while before you can go back in, depending on the strategy you are using. And that BKNG, I don't recall how much profit we made on that. $700 or 16% return. So buying and selling those stocks does not mean that everything in our portfolio is positive. And as you can see, the report of the position of the account, stocks that I highlighted in green are stocks that we purchased for swing trading strategy. Some we purchased it last year, and some we purchased it this year. And that is a sign that we don't like to sell stock at a loss, and we just like to wait until it becomes positive. And the one that I didn't highlight as the one we purchased for dividend income purposes. So at the end of June, there are a few stocks that are positive in the account, but we didn't sell them because we think they can go higher depending on where we bought them. Google is an example of that. And by the way, this is a maximum daily chart using Thinkorswim. So we purchased it there, but again, it does make a wide mountain though. So last time that it reached here, it went back. It has not come back yet. So it is a risk we are taking, hoping it will continue to go up. It could decide to go down. We don't know, but it's positive, and we don't want to sell it because it could go up. If it turns to go down, then we'll be in it for a while before it go back up. Again, our entry point is at the valley, our exit point is at the new high, because those stocks, they uptrend, so they reach new high on regularly. So but yeah, and that is just one example. But the one that are not in red, they are the one that are unrealized profits. That is unrealized profit or unrealized loss. Okay, so we have two here as well, have good profits on it, and this one as well. But again, we think they can be they can reach a new high. So if we take this for example, we bought it right there at the valley, therefore, but again, we bought it there as well. So we bought it at the peak, the way we are trading it, but then it pulled back. So when it reached the valley and start going up, we bought it again. So even though this one is profitable, we lose money on this one. So we cannot sell it until it's well above this one, meaning it has to reach at least the first new high before we decided to sell. So when the brokerage company Charles Schwab trying to combine how total of share purchased, how much we pay for all of them, and how much the value is now, is going to show this profit. But the way I track things by date, if I sell it, chances are we lose money on the first purchase because it's far from being close to it yet. So if we go to MLM session, can go down here. So you can see we bought in 2024 at the peak, and then it went down to the valley, about 200 or more difference there. The good news is we purchased less share last year because we were doing 2,500 or so per trade, and then we purchased more this year when we reached that valley. This year we are implementing that strategy, long optional swing trading strategy, when last year was short optional swing trading strategy that we use. So yes, if we sell it, we could make profit because of the number of shares we purchased at a lower price. But Charles Schwab is combining both, and how much is selling now divided by the number of minus those total costs is giving us that, that realized profit there. But when I put them one by one, I will be losing money on the first and making more on the second. Does that make sense? Well, therefore, I like to wait until it reaches a new higher anyway, since that is our exit point target. But yeah, those are just two examples to share with you. But you can see that we have a lot the stocks that are negative in the account. That's why it's important, if you are not selling stock at a loss, to take your time to select stocks for your watch list and use the strategy you are trading with, and just start small. Even if that's $1 profit after you pay a fee, and that's why you have, that's okay. Just start small. The minimum number of shares you can buy after fee you pay, you can make $1. You start like that, and once you start making profits, you know that you have a good list of stocks on your watch list that are well curated and work well with your strategy that you took time to customize as well. And once those two match well, to make more profit, you just buy more share. Does that make sense? So you just start small, and stocks that didn't go well, you just mark them, and later you take them out of your watch list, replace them with some other stocks again, and over time you'll have a watch list of stocks that are doing well on with the strategy you are using. Thank you so much for your time. We thank you very much for watching our videos. We thank you very much for your comments, and we thank you very much you all that subscribe to our channel. I'm Afiavi Liberman, Cross of Liberman Consulting L.L.C YouTube channel, and ninasoup.com our blog. On our channel and on our blog, we share different ways to save money and different ways to make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. For the month of June, we made $3,000, but for some other month, we didn't make any money at all, and some we made less. But again, is earning outside of our jobs. You just start small. First, know how much you are making, how much your expenses are, and see if you can trim your wants down a little bit, and make sure you have enough for your need, and trim down your wants a little bit so that you have money left to allocate all your debts, and just a little bit to start trading, to start learning. And once you are ready to start actually trading and making more money, you'll have more income left from your paycheck, especially after you are done paying off debt, to allocate toward your trading. or if you want to do both, pay debt and trade at the same time. But just start small at the beginning, and once you are sure with the strategy you like, customize it to meet your risk tolerance and your personality type, and find stocks that work well with that strategy. Just have those lists of those stocks and just trade from that list. That way you are not going to spend time looking for stocks. You are just going to spend time analyzing the stocks and buying them, and yeah, you are going to spend time recording your trade anyway, so you don't want to keep looking for stocks. So over time, you'll do that for a while, and then over time you might have a good resource of stocks that you can tap into to analyze and trade from. Thank you so much for your time. Do you trade stocks, and which strategy do you use? Will you share that with us in the comments? Thank you.